There is a gap in the daily time frame that has a high probability of filling, but it's our job to determine whether the upside or downside comes first. An upside signal can be seen simply by the closing of the weekly and daily candles, but I have a new approach. Let's pop open the hood for a look into tomorrow's potentials. Welcome back to the channel on this silly Sunday. This is ARCa, and let's grab some popcorn. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. So let's go ahead and dive into AMC here. This is the monthly chart, and I do have a little bit of a new approach for you here, right? In the sense to where, I speak to you guys about this all the time, right? Usually we end up getting a 50% retrace of the prior bar, and in this case, this is the monthly candle, right, that opened up almost a month ago, right after getting this massive upside. This was the candle that we got here for the 1330 valuation in the pre-market when GME went up to 80 bucks, right? So usually what ends up happening is that we retrace to around 44 to 50% of the prior bar when we are opening the new bar, right? So this was our new bar here, and check it out. Price action came up. This is the 50% of this bar right here, right? So we came up and resisted from that 50%, and now we're coming back, and it looks like there could be a floor right at around the area of about $4.33 being the closing valuation of the prior green bar. So there could be a bounce there. Now, check this out. I have well, you know what, guys, just real quick. First of all, we closed the week, right? You guys have already seen this massive head and shoulders that I've been talking about. So yes, this could start introducing some interesting potentials. Okay, I'm not going to say that it's right away, but I will say that there is a probability that it could happen soon. Okay, now, speaking of that closing of the prior bar, we just closed the weekly candle. Now, the weekly candle low is located right about here at $4.47. Okay, now $4.47, that is a possibility for us to come down into real quick and then start to retrace the 50% of this bar come tomorrow. Okay, so what is that 50% of this weekly bar? So let's just go ahead and put it up right about in here and observe. So the 50% of that prior bar is going to be $4.82, which is very interesting because that puts you in a very bullish area, right? That puts you inside of the golden pocket for an upside move, right? So that's very good. And not even to say that inversely, yes, $4.81 just happens to be the 0.5 fib right here, which is also the golden pocket. Very nice. Okay, so let's go ahead and now determine what could be seen as far as an upside reason. Okay, so this is a bullish wolf pattern. Okay, so this formation here is similar to a falling wedge, but it happens when you get a break below the regression line. As you can see here, you got a break below that regression line, and the target is figured by the low of wave 1 and the high of wave 4. So in this case here, we have wave 1, we have wave 2, 3, and 4. Okay, this is going to be our wave 4, and we're going to just apply a trend line like this, right? Just the same way that this formation has it, right? Just like that. Let's just go ahead and make sure that we can keep this at a minimum thickness, right? Okay, so what you do now is, yes, you can see a target here, but that's random, right? You have to make sure to kind of guide yourself around it. So let's just say that this is a 4-hour candle. We are in a 4-hour chart, right? So we start to observe the potentials of breaking out. Of course, this 481 that we just spoke of just so happens to be the resistance of this regression. So it's already interesting that we're getting that, right? Okay. So that doesn't mean that we're going to start breaking above the 481 right away. In fact, what could actually happen is this, that we go up to that 481, right? Just about like this. We face the resistance. We come back down, find the support from around 463, then start our trajectory, right? This is going to zigzag. It's going to do things like this, right? It's not going to be one solid move to the upside, okay? So this target here, the way we figure it is that we ride our mouse, right? And we look at this cursor to the left and to the right, and we see what areas we have as resistance. Of course, there is one resistance right over here That's let me show it to you like this, right? Check it out. All these resistance levels, right? That could be right around the areas of 524, right? Let's keep on hovering above it, right? Let's just see if we have another one. Yeah, we have another local one at about 531, right? It's giving us the ranges. So, and if we keep on going, it looks like the bigger one is actually located right above here. It's right, I would say actually right about here to figure the bottom of that range. I would say about 545. Okay. So now what you do is just identify this simply by drawing a little box like this, right? And we draw another little box. I just said that this was a range, right? So the range is because of this top candle right there. So we just go ahead and draw it like this. Get rid of those red lines, right? And now you have your zones that you want to take a look at. These are the types of things I teach in the ArcMastersCourse, which, by the way, it just started on Saturday, and we're repeating the introduction week 1 tomorrow, Monday, 6:30 p.m. Pacific. So please go ahead and get in touch with me immediately so that you could become a master student, right? This is actually the biggest class I've ever had to teach, right? This one is already above 45 students. It's incredible. All right, so please, let's just go ahead and continue on the analysis, right? So if it is the case, team, that we're observing the potentials of a potential bounce here, of a bounce, right? We're looking for a bottom side first and then a bounce because of the close of the weekly. I got to tell you still, remember, we still have a gap that's located all the way down to the areas of about $4.33 because of this formation, right? We have this huge 50% retrace of this bar here, and then we would come back down to 433 and then face a bounce. So now if we're looking at this, even inside of this smaller time frame, the 4-hour time frame has a similar gap right in here, right? And that gap bottom is 435. So it absolutely rhymes, right? It's absolutely rhyming with the potentials of a monthly gap closure, right? And also the fact that we have the weekly time frame downside to about right here, right? We have it at around 447 that is showing us that we could go down first, right? We could go down first, maybe create a little bit of a peekaboo here, right? And then ride to the upside here and start resisting from the 50% of this bar since we just got that closure. What that's going to do for us is that if we do ride to the 50%, that's going to put us with the support of the NOT 382 at 474. Okay, we've talked about that target several times. 474, if it does serve, and here, look, the NOT 618 at 473. If it does support, if price action is able to be held here, then that means that we have some further upside prices to look at. And of course, we already know that was going to be a pullback zone because of the 481 being the 0.5 fib. And of course, the 481 being the top side of your regression right here, right? So we would pull back naturally. We got to make sure that 474 holds, even if we dip down to 463, 464 before a bounce. But now you know the upside targets, and now you know the potentials of how this wolf formation can happen. Just for the receipts, like we always do, right? I'm just going to go ahead and put the targets right here for you so that you can go ahead and take a screenshot of it and refer to it in case we need targets when we do approach them there. Okay, let's go ahead and now take a look at the next chart here, because the next chart is a chart that we were looking at early last week. Okay, check this out right here. Oh, you know what? Yeah, here we go. This is it right here. So we were talking about last week facing a potential bearish formation. This was a right angle triangle built during an upside. That usually tells us that there is a downside to be figured. These were our first targets right down here, using 460, a potential range in here to 464 to 473. And we said eventually that we would reach, guess where? $4.34. How did I get that target there though? I got it because of the thickness of the triangle. Check it out. We take that line. Let's just make it let's make it really visible so everybody is abundantly clear over what that is, right? You know what? Let's make it yellow. Here we go. Or what the heck is going on, man? Let's just make it red. Whatever. Can't even see it. All right. So that is the width of this triangle, right? The top end, the hypotenuse, all the way down to the support level, to the bottom support. So now we apply that, right? We apply that to the bottom side right in here. Let's just make sure that stays red. And that gives us $4.34. But guess what? There's also something really weird because we've consolidated inside of this range right here, right? So why don't we just kind of observe that real fast? This zone in here. This is our chop box, right? We've been in here for a few days. So what if we took the width of that box, right? Let's measure it just like this. And then we apply it as a breakdown because we're breaking down right now. What target does that give us? Well, take a look. It gives us $4.33. Incredible, right? Insane how things tend to rhyme when you're absolutely looking at, I mean, look at this. The one spot 272 at $4.30 in geometrics. My goodness, man. Yeah, so that's what I mean, you guys. That's what I mean. So it's a very good thing that we can see these bottom side targets realize, and we can all kind of agree, right? So I also wanted to show you this, right? This was about Wednesday, I think, last week, and we were talking about the 6 hour Monday. It could have been Monday it was a move that was Monday, Wednesday, and it was due to be completed by Thursday or Friday. And we absolutely got that bottom side, right? This was our dead cat bounce that we were observing, and we finally got the target that we were looking for on Friday. Congratulations if you were able to take advantage of that. Okay, team? So, yes, I want to just make sure that I can give you the bottom targets to their absolute potential. Okay, now take a look at this in the 6 hour time frame. That's the bottom of this gap here. Bam, $4.35. Even more rhyming. $4.34 down here. $4.33 with the range, right? Yeah, $4.33 with a monthly candle close. Guys, it's just an enormous amount, and $4.30 at the one spot 272. Guys, I'm just saying that we could be facing a bounce to the upside soon. Okay, there could be a floor located very soon. Okay, I don't want to spread any hopium. I don't want to do anything like that. Okay, guys. So please do me a favor and make sure to join the ARCa Bulls trading team. Right, you can join them by the links that you can find right over here. Right, and we'll be observing the markets every single day and trading the markets every single day for their opportunities. Okay, I actually just saw another dead cat bounce here in the hourly time frame, and we can measure that from the top end of the cat to the bottom end of the cat right here, and then you apply the trend line to the bottom side here, and the target that we're getting is, well, what a surprise, $4.31. My goodness, man. So yet again, another validation right at the end of the video, right? So guys, I appreciate you for coming on by. I definitely want to see you in class, right? So make sure to join the ArcMastersCourse. Really want to make sure that I can get you guys trading the right way. And now one more piece of statistic, right, is that yes, we have over the last 5 years studied the price action of the open, high, low, close intraday of AMC, and Monday just so happens to be the second most bullish day that it has to offer. So one spot 74% is the average return over the last 5 years. So there you go, another banger for you right at the end, right? Love you, team. So let's just go ahead and speak a little later. Thank you for watching. Love you all. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night and or day. And I'll catch you at the bell mañana. Adios.